Good evening, everybody. Welcome to the Moving Markets Podcast. It is Thursday, December the 18th, 2025. And at the time I'm recording this, it is very, very late. In fact, I know that the majority of you that listen to this podcast on a regular basis are not going to probably listen to it until tomorrow morning. And the reason I'm doing one this late in the day is, number one, I didn't get it done earlier in the day, obviously. But number two, I do not want people that are up early on the East Coast, people that are in foreign countries, and are going to, have plenty of time before the market opens. And even those of you that are on the West Coast, it's 8:50 p.m. your time. If you're up before the markets are open, you'll still have a chance to listen to this and watch this. I'm just going to comment a little bit on what happened today. The main reason I decided to do this instead of just skipping one today because I was so late is that I need to talk about Micron and what the plan is for Micron. The majority of you that follow the Safe Option Strategies program are in the Micron trade, or at least you're following it along for learning purposes. And you need to know what the plan is for tomorrow morning, because I hate going into a Friday being this close to the money on an option. We need it to be above or below a certain price, and it's just right there, close but not quite where we need it to be. So just real quickly, the only commentary I have on today's market move, great move by the NASDAQ. I could go on an entire rant about how this movement of money back into NASDAQ stocks completely flies in the face of what people have been saying for the last week, that there's a rotation. It's not that there wasn't a rotation out of tech stocks, but all the naysayers that are saying that, now's not the time to be in the Magnificent Seven, or you've got to move money into some other things. Well, there may be some wisdom in that, but again, I think so many of these analysts that we kind of get in this mode of relying on to be the experts who can guide us, they're just guessing, and they're guessing and reacting to what is happening in the market instead of saying, here's what's happening and here's what you ought to do to prepare for it. Instead, they're saying, after there's 4 out of 5 days that sell off really heavy on the NASDAQ, they're like, now might be a good time to get out of some NASDAQ stocks. Like, no, I could revert back to my 1980s teenage years and say, no crap, Sherlock, except I wouldn't be saying crap. But I'm already on a little bit of a soapbox. I'm not going to stay up on a big soapbox about how this movement today just absolutely flies in the face of this. This was largely spurred by great CPI numbers that came in today. And it was also spurred by Micron, which the news was so good on Micron that it couldn't sell off. I mean, it was just kind of too good for it to sell off. They upped their guidance significantly. The demand is high for what they're doing. Micron hit everything just perfect and had a huge day up today. Now, let me talk about our Micron trade and what the plan is with our Micron trade for tomorrow morning, and then I'll comment just a little bit on the CPI and the PPI numbers, the CPI numbers that came out today, and the PCE numbers that are coming out tomorrow. Okay, so Micron, phenomenal day. Yesterday, Micron finished down here. What were they? 227, 228, where they finished. Not a good day at all for Micron. What is that finishing price? Close 225. Today they opened clear up at 256, got as high as 263 at the highest point, closed at 248.55, and I was a little bit disappointed with that close, even though that is still $23 higher than where they finished yesterday, which is phenomenal. In the last 5 minutes that the market was trading, they gave up like $5 a share. They were trading at 252 or 253 and gave up like $5 of that, literally just in the last 5 minutes the markets were open. It was kind of frustrating. If you look at this intraday, let me get it up here real quick. This intraday chart of Micron, this 1 day chart, look at that really steep drop off just in those last few minutes that the market was open. That was frustrating. I was in my car driving on the highway, driving home. I had my phone sort of propped where I could glance at it. I was trying to be safe and still watch what was going on, kind of playing a dangerous game with watching the screen of my phone a little bit, listening to the closing bell, and watching that drop off like that $5 in that last few minutes was really kind of frustrating. Um, but here's the on the flip side, it's got almost three of that back in aftermarket trading. So this is no guarantee at all of what's going to happen tomorrow morning. Tomorrow morning, the markets are going to be driven by PCE reports. If that PCE report is good, then you're going to see the markets up again, I think, in a big way tomorrow. If it's neutral, I think you'll see a continuation of today's rally, maybe not quite as strong. If those numbers are bad, you could see people just flip the switch and have an exact reverse of what happened today. So it's anybody's guess what's going to happen with those PCE numbers. Analyst expectations are that it's going to be some pretty tame numbers. But if they have a beat the way CPI numbers did, this year over year PCE number is expected to be 3.0. If that came in at 2.7, 2.8, like the CPI numbers did, if instead of 3.0 on the core, it was 2.8, 2.9, 2.7, somewhere in there, if month over month was 0.1 instead of 0.2, I mean, if you had a similar story, it's going to be hard for these markets to not just skyrocket to the upside, and specifically Micron with them. Micron had such good numbers and such a good run today. They should go up again tomorrow, but you never know if there's going to be some short-term profit taking before a big holiday week. One of the biggest holiday weeks of the entire year begins on Monday. It's going to be a holiday shortened trading week. No trading on Thursday, on Christmas Day. I believe a half a day of trading on Christmas Eve day, and then the markets will be open on Friday, but very, very light volume. So it's going to be a very suppressed market. Could be very volatile. Going into that, you can expect some people to want to move into cash. And so some profit taking on Micron should be somewhat expected. Now, here's the trick for us. If Micron opens tomorrow above 251, you're going to see our option trade go into the plus column very, very quickly. We paid between $4 and $4.10 to get into a $5 spread option trade. We only need Micron to finish the day tomorrow at 249.10 to be guaranteed break even. Any finish tomorrow above 249.10, and theoretically we would be profitable. Now, here's the hard part about that. Theoretically, we'd be profitable, but if the stock gets close to the end of the trading day and Micron's trading below 250, your broker is going to look at your account, and this is what they're going to see. You have a 250 short option, short call. You have a 245 long call. What your broker does not want to see happen is for a finish anywhere in here between. It could be 2 pennies below 250. It could be 1 penny below 250. And what happens is this expires and this is automatically exercised. When you have a long option that is in the money on the day of expiration, your broker does not sell that long option for you. They do not close it for you. And let's say hypothetically, this is where the stock price was, 249.10, 1 or 2 minutes before the close of the market. Your broker is not just going to give you $4.10 credit and close this option for you. They are going to exercise this. They're going to buy shares of stock for you at $245 a share. And then you have to hope that on Monday, they open up at 249.10 or above so that you can immediately sell the stock. And that's a game that most brokers are not going to play. So here's what will happen. Here's what your broker will do to you. And it's legal. It's, from their perspective, it's fair. And it sucks for you if your broker does this. If you have that 245 option and that 250 short option, So long call, short call. If this is what you have towards the end of the day and the stock price is just a fraction below this, your broker is going to look at that spread. They're going to take the mid price on that spread and they're going to close that spread for you. And even if the stock price is, let's say the stock price is at 249, let's say it's at 249.80. And you would think at 249.80 that if they just closed this for you towards the end of the day, you'd make $4.80 and therefore be 70 cents per share profitable. I'm telling you right now, they will not do that. They will wait. And I believe they do this intentionally. I don't think this is a computer thing. I don't think it's an algorithm thing. I think you got brokers sitting at their desk that are going to screw you over if they can screw you over. I really, truly believe that. They will wait until the mid price on this spread is something like $3.90 or $4. And they'll simply close it for you at that, and you'll take a loss on the trade. The stock could be 249.80, and you could be in your mind thinking, I've got $4.80 of intrinsic value right here. So logically, I would have to be able to get that much to close it. But you've seen how the mid price in spread trades jumps around all day long. It jumps up and down, and sometimes it's hard to get it to sit in one spot long enough for you to fill a trade. You've got to watch that like a hawk. So here is the plan for tomorrow morning. Okay. One of two things is going to happen. One of three things is going to happen. Micron's going to start moving right at the open of the market this much or more. I hope there's more. I hope at the open of the market this morning, with tomorrow morning, within a couple of seconds after the open, 5, 10, 15 seconds, I hope Micron is at 255 or moving towards 260 again. Then if you set a limit order somewhere in the neighborhood of I would say 475, anywhere from there to about 490. If Micron has a jump up of $3, $4, $5 a share in the early few seconds to a minute or two of trading, you'll get filled on your spread somewhere between 475 and 490. If you're too aggressive and you set it at 495, 496, 497, 498, somewhere in there, it's harder for your broker to find a matching order to be able to close your trade. Remember, these are real contracts. These aren't hypotheticals. These aren't your broker saying, oh, if he wants to close the trade for this much and that's the mid price, we'll just do that for him. No, there's got to be orders out there that they can match it with, contracts that they can match up so that they can close your trade. And if you're overly aggressive right here, you won't get filled. You don't want to be too weak right here. You want to be, I don't think I would set it. If I got into this trade for 410, I want to get at least 470, 475. This is kind of the minimum that I want to get. But depending on what futures say. If futures tomorrow morning, just before the market opens, are up $6, $7, I'm setting a limit order at 490. If futures are $2.5, $3, $4 to where it looks like they're going to open just a little bit above 250, I'm probably setting a limit order at 475. And I'm going to hope that my trade closes really quick. So one scenario is that they're moving up and you can set in a limit order. They'll get you a nice profit on this trade. Now, another scenario is that prior to the open, Micron's kind of flat. Maybe we get some PCE numbers that are just kind of not great. They're not super bad, but they're not great. Maybe they're just 0.1% higher than what the expectation was. And that wouldn't necessarily be a horrible thing. And maybe you'll see futures down on the NASDAQ, but maybe Micron is just strong enough after that earnings that they're still up 10 cents or 12 cents or something. Or maybe they're up $1.55 and the pre-market price looks like it's going to be barely 250. So I would call that something sort of stagnant. Okay. Then what you've got to consider doing is if you got into the trade for 410, you've got to consider getting out for something like 412 to maybe 420 and just cover your costs. Be okay with a break-even spread. That 2 cents to maybe as much as 10 cents right there would basically be covering your commissions, your fees from your brokerage. and just be enough to get out without any kind of a loss at all, including the commissions and the fees that you pay. So if it looks like we're going to open just right in that neighborhood of 250, I'm probably just going to try and exit the trade without losing money. Now, if for any reason it looks like Micron is going to open completely flat, like right at this 248 and some change range, or down a little bit, then I'm going to take my entire spread. I'm going to take the 250 short call. I'm going to take the 245 long call, and I'm going to roll the whole spread out. And I'm not going to roll it out 1 week in time. I'm going to roll it out 2 weeks in time. I'm going to roll the whole spread straight out to the January 2nd expiration day. And I'm going to try to do that for a break even, a little tiny bit of a credit, or just a little bit of a debit. I just plus or minus 5 or 10 cents. If I paid $4.10 to get into this, plus or minus 5 or 10 cents, like I would roll it straight out for anywhere from a 5 cent credit to as much as maybe a 5 to 10 cent debit. And if I could get a little more credit than that, great. If I could not pay any more than maybe a 10-cent debit, I'm okay with that, because I think Micron's earnings were so good that you're going to see them continue to climb over the next couple of weeks, and you're going to see them back up within a week or two. Even if tomorrow is a down day, within a week or two, you're going to see them back up here to 260. So if I got in initially for 410 and I can roll the entire spread out 2 weeks in time, and it's only going to cost me 10 or 15 cents, and then my net debit in the trade, my adjusted net debit becomes $4.25. I'm okay with that, because I really believe we're going back to 260. And I'll wait until I can close the whole thing for more than that 225, 230, 240, and I'll get out of it and I'll have a little bit of profit. I won't lose money on the trade. I'm okay staying in this thing over the weekend and into next week and even into the beginning of the week after that, to not lose money on it if it starts to move down, if the stock price starts to move down at the open tomorrow. So the plan is, if the stock price is moving up at the open, we're going to just try and get out with a decent profit. We're not going to get greedy. We're going to try and get out with something like 470, 480 per share. If it looks like it's going to be relatively flat or just get barely above 250 a share, we'll just try and get out of the trade without a loss. Break anything better than break even, we'll take it. We'll be good with that. And then if it looks like it's going to open to the downside, we're going to roll the whole trade out a couple weeks in time. I will be up in the morning. I will be on Discord. I will be sending out to everyone exactly what I decide to do when I decide to do it. So be watching that tomorrow morning and follow along. Now, I got to get this posted online. I got to get this recording done. PCE numbers tomorrow. This is a little bit of a delay, just like the CPI numbers were. If these numbers come in at expectation or below expectation, this market's going to have another big rally day. If it comes in a little bit hot, we might be okay and be a little choppy in the market, probably finish a little to the downside. If this is a big miss, if this were 3.2, if this was 0.4, if either of these were 0.4, 0.5, if it's a big miss and these numbers are higher, you're going to see the markets give back everything they gained today and more. And you just need to be prepared for that. Be ready for that possibility. The story that is headlining CNBC right now at the end of the day really ticks me off. This is an incredibly politically biased report. Economists see a lot of flaws in the delayed CPI report showing downward inflation. I guarantee you, if the numbers would have been high today instead of low, these same exact economists, who are a bunch of political hacks and should not be listened to, would be telling you that you have to trust these numbers, that inflation is bad and everything Trump is doing is bad. I guarantee that's what they would be saying. But because the numbers were really good, better than anyone expected, they're saying you can't trust the numbers. Watch tomorrow. If you don't believe me on that, if you think I'm being super politically biased, watch the PCE numbers tomorrow. This is what's going to happen. If these numbers come in low like the CPI numbers came in, you're going to see a continuation of this story. This story will be perpetuated. You'll hear CNBC, ABC, NBC, CBS, CNN, MSNBC. They're all going to be saying you can't trust these numbers. And they're all going to have experts and analysts telling you can't trust these numbers. But I guarantee you, remember this headline right now. Remember this headline. Because if these numbers right here tomorrow come in hot, if all these PCE numbers are higher than what was prior or what there's not even analyst expectations. This is just last month's numbers. If they come in higher than the last report, these same dishonest, biased, hypocritical economists, and I believe that's what most of them are going to be saying, you have to trust these numbers. See, we've been telling you, we've been warning you. Everything is bad that this administration is doing, and it's causing high inflation, and the affordability crisis is bad. Watch and see how tomorrow's numbers get reported. Good numbers on PCE, you're going to see more of this story right here. Bad numbers on PCE, these same people are going to flip the script because they are dishonest brokers, they are hypocrites, and that's what they do. Okay, I'll get off my rant. Hope you had a good day today. I'll be online in the morning watching with you. Thanks, everyone. Bye-bye.